All right, hey everyone. Hold on a second. Mark here. Mark B Markets. I'm adjusting my microphone. All right, cool. Thanks for joining me for another U.S. market open analysis session here, where we're going to go over the major markets. I see a bunch of questions in the chat. Very cool. So yeah, we have a lot of things to talk about. Some interesting things going on here. Here, let me just put this in here real quick so we can get this thing started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, so for those that are new to the stream, here's what I'm going to do. I'm going to basically run through the major markets. I don't really have a lot of time to answer questions. I see a couple of questions in here. I do want to try to answer those, okay? About the euro, and I saw that thing about Bitcoin. Definitely have to talk about that. All right, so real quick before I begin, I am sponsored by 8Cap Partners. They are an Australian-based Forex and CFD broker, okay? They trade all kinds of instruments. They use the MetaTrader platform. They are for non-US residents. If you open an account with 8Cap and you deposit $500 and trade one standard lot, you can get my training program for free, okay? But you have to be a non-US resident and you can't be from a sanctioned country. Also, really quick, I have to mention today, we're having our first student meeting. Speaking of the training program, okay, that's at 3:30 today. It's only for students, okay, people that have been in my training program over the previous year. If you're not part of the training program, you should join it, okay? Learn more about that in the link in the section below. You know, there's a lot of value in that program, even though if you're relatively new, you're probably not going to appreciate it because I put it together with the idea that less is more, and I really focused you in on information that matters. Anyway, we're doing a small group training or review of the material today for students, okay? Just so you know. Other than that, join my Discord community. It's still free, but a paywall is coming, okay? So the premium channels are soon going to be cut off and only available to premium members, all right? But right now you can still see them, so check it out, all right? Anyway, let's get started here with the analysis. So first things first, I'm going to talk about a couple of these markets before I answer the question, right? Because I see one here from Stian. I mentioned on the stream on Monday the potential double bottom for Bitcoin on a daily time frame. Is this in play, or do you still favor the pullback? Okay, I'm currently short from 18,850. I was almost stopped out today. Okay, I'm glad you mentioned that, Stian, because we're going to talk about this. First of all, this situation right here, so obviously if you're short from 18,850, you took the swing trade that I put out the other day in the signal channel, right? Because that was back over here in this area. Now, if you read that trade idea, I mentioned that it was from a less than ideal area. Okay, so the risk was higher that you can get caught in something like this. So that should have been, you know, apparent. I put it in the thing there. Now, this is the ideal area for a swing trade short. This is the range resistance. Okay, I'm glad you weren't stopped out yet, but at this point, you know, what can you do? At this point, you have to let the market decide, because if you exit now, I mean, there's no sell signal here or anything. There's no new buy signal. It's just sitting at the resistance. This is the range resistance, 20.5 area, okay? And it's trying to reject it, but it may squeeze a little further before it rejects it. So here's the thing. If this thing stops you out, respect the stop. Don't move the stop, okay? Have you seen the pound? All right, if I had moved my stop, or if I said I'm getting back in because I know I'm right, if I had done that, it'd be against me another 150 pips. Okay, I got out for a 205 pip loss. This thing is at like 15, whatever it is, 15 and a half, whatever. I mean, that would have been we're looking at a 350 pip loss, possibly more, if I had not respected that stop. So if you get stopped out, respect the stop. I cannot emphasize that enough. Now, I don't believe, I could be wrong, I don't believe Bitcoin is going to go in a straight line, but it can. All right, if the dollar pulls back, you know, we have a bunch of news coming out between today and tomorrow. We have Bank of Canada today, which is not a big deal, but tomorrow we have the ECB, we have Bank of Japan, and if that causes any kind of reactions with the dollar, this thing can squeeze further. It's possible, okay? So respect the stop. Now, at the same time, nothing has changed on the bigger picture, okay? So far, this resistance is being respected so far. If a sell signal develops here, this is the ideal spot for a sell signal, okay? Not here where I called that one. In fact, there was a warning. Now, I talked about this, right? There was a conflicting signal, but I suggested that, give the thing a chance because there was relative weakness. In fact, I wrote a whole TradingView article about that. But look, I'm not always right, okay? I suspected relative weakness, and then this thing squeezes. So that's part of the risk that we take. We have to accept that, okay? That's why, when I tell people risk only 1%, you shouldn't be getting hammered in something like this. You shouldn't have 5% or 10% of your account getting wiped out when you get caught in a move like this. Markets are random, right? So I suggested giving it a chance because the general structure is bearish, and it's generally the right thing to do, right? Give the short a chance, even if a conflicting signal shows up, especially if it looks like relative weakness at the time. Now, so now the next time I see something like this, I am going to make sure that I specifically point it out, and I'll give you the choice. But going back, if I was in that same situation again, even though we know this now after the fact, I would still have to give it a chance because the general structure is bearish. And usually the right thing to do is give it a chance if you're on the side of the trend, right? So this went counter and it squeezed. So again, that's why we evaluate risk and focus on risk. So if you get stopped out, don't worry about it. If a new signal develops, I will look to call that short again if I see the sell signal. This is a much better location. Keep in mind, it may still not work out, okay? If we get a reversal, like if the dollar starts breaking supports, this thing can squeeze. And, you don't want to get caught in that. But we'll see. Anyway, if I see the sell signal, I'll mention it. All right, but right now, there's nothing to do. You have your stop in place. Let the market decide. All right, now let's take a look at this on a 30-minute chart. I hope that gives you some more perspective there, Stian. And I'm glad to see you. I'm going to see you at the student training today. All right, so here's the thing, right? Intraday, we're looking for levels here. Okay, as you can see, this blue line represents one of the range resistance from the bigger picture. As you can see, price action found some weakness in that area temporarily. Again, as a day trader, look, bearish pin bar. I mean, that's all you're looking for, okay? In that location, that was worth something, all right, if you manage to take that. Again, we're looking at this after the fact, but you should be able to learn from some of these ideas. The low is 20,633. I mean, the low of this movement here was 20,353. I mean, there's 300 points in there. Are you going to make all 300 points? No. But if you can get away with 100 points intraday or something like that, that's a great day trade. Anyway, that would have been the short, aggressive short, because why? This thing is bullish right now, intraday, okay? So let's look at the levels because that's what we're here to do, right? And what kind of Bitcoin setups are possible? Well, again, this right here is a 30-minute. Right? Usually I check the hourly, but 30-minute hourly, basically the same idea. Look at this current candle. So this is another bullish pin bar. We have, 15 minutes before this thing closes? If it closes like this and takes out the high, you have yourself a new intraday long signal. Now, how far does that long go? I mean, in theory, it should test up here, right? In theory, but it may not make it up there, all right? So if you're looking for the intraday long, again, I mean, you want to be aggressive and try to give it that chance to work its way there, great. But that's, again, you're looking at more than a couple of hundred points. You're better off taking something off toward the middle, right? Something off over here in this area, right? Trying to just lock in 100 points or whatever. Keep in mind, if you're only looking to make 100 points, your risk should not be more than 100 points. Maybe you're looking at 150 max, and then you're looking to make 150. You have to be at least 1-to-1, and that's less than ideal as well. All right, you want to be more than 1-to-1 in terms of your reward risk. Don't sit there and risk 500 pips or 500 points only to make 100 points. You will never win in that in that type of scenario in the long run. So, but right now this thing is lining up to be a long. Your support level is 20,300, basically, right? This area here. As long as price stays above that, you have a higher low. So a higher high is within reason. Okay. That doesn't mean we'll get it, but that's what's within reason. And that's what you're looking at. As far as resistance goes, This is your resistance up in here, basically. That's your intraday resistance, even though, you could say, well, what's this? Well, that's your broader resistance. Broader resistances are not pinpoint, right? So you could basically draw a range between the two and say, okay, this area is a resistance area, right? That's a great place to sell, to take profits. Not exactly, I mean, if you're going for shorts, they're aggressive. As you can see, this thing may just keep going, right? And you don't want to get caught in that. So just keep in mind, if you go for the short side, you have to be quick to get out if it turns the wrong way, meaning you get the conflicting signal. By the way, you're most likely going to use a 15-minute or 5-minute to take the trades, not the larger time frame, okay? All right, so that's Bitcoin on 2 time frames. Let's go back now. Let's jump over to, let's take a look at the S&P and all those other things. Okay, so let's go to actually the bond market. Let's see what's going on with the bond market. Right, always have to check that. Always have to check that. Look, so the bond market is still rallying. See that? All right, it's interesting. And again, you're going to see a lot of excitement out there. I hope you're not. I hope people here, I hope you're not getting sucked into news headlines. I really hope you're not, because that's really a novice game and you're just being Captain Obvious. Captain Obvious never wins, okay? Captain Obvious represents the herd, right? The crowd never wins, especially at turning points, right? They always say the crowd is always wrong. Okay, but it doesn't always seem that way. So, well, I was long for a while and everyone was long and we all made money, right? But it was temporary. Okay, so the crowd never wins. You don't want to be part of the crowd. Anyway, this right here is still fooling around an old support, new potential resistance area. So this isn't an ideal spot to turn around. Does it turn around? I don't know. That's up to the market, but it's in a location to turn around. So for example, if I was looking to go long bonds, I would not be going long here. I would be thinking short, if anything. The structure is bearish still. It could be changing, but we still have some time. We have to give this thing some time to provide that evidence. So, okay, I'm not going to jump to any conclusions here. I still have to go with the general structure. The general structure says short. So I have to suspect that the bonds are more likely to turn and test that low. Again, we have some important news between today and tomorrow. We'll see if that affects the bond market at all. And just because, there's scheduled news come out, there may be some other news that comes out by surprise that turns this thing. I don't know. But you have to focus on the levels and the structure, not the news, okay? Because this tells us the probability. This gives us an idea of what's reasonable to expect, not the news. I have to emphasize that because, no matter how many times I say that, people say, you see the news? I don't watch news. I have no idea what's going on in the world. I don't care. I look at prices, right? Price tells me the truth. News does not. All right, anyway, so that's the bond market. It's interesting, but it's too early to call this any kind of economic change, all right? Although this could be the beginning of one. We'll see how it plays out over the next, few days, few weeks. That's why we check the bond market every day. All right, let's take a look here at SPX, all right, stock market. So this has been just ridiculously out of control. But that's the nature of a bear market rally. Keep in mind, bear market rallies, they're confusing. They're highly irrational. Markets are random. That's the first thing you need to accept. Markets are random. They can do whatever they want for whatever reason. If you think there's some way, some magical way to know where a market's going in advance, you're only fooling yourself. There's a lot of people out there that will also try to convince you that there is some kind of magical way. They have it and they're going to sell it to you. Please don't believe that. Markets are random. There's a thing called the efficient markets hypothesis. Google it, okay? No one talks about that because no one wants to hear about it. Everyone wants to believe the dream. There is no dream here. We need to be rooted in reality. It's possible to make money in the markets, but it's not easy. It's very hard, especially when markets are random. So either you have inside information or you don't. Most of us don't. I'm not a US politician. I don't have inside information. So I have to basically work on probabilities, okay? And I get those probabilities from price structure, okay? Because there is some order to the market, even though it's highly random, but opportunities are going to be rare and they're going to be isolated. Structure helps us figure out those areas where probability can be stacked more in our favor, and we have to wait for those periods. There's not all this jumping in and out and all this, oh, buy it now, blah, blah, blah. You don't react. react. You let the market prove, and then you act after the market proves or after the market confirms. Okay. And even with all that, you can still be wrong. I mean, look at the pound, look at the Bitcoin trade, which is practically stopped out. Those were not reactions. Those were based on market information, and the market turned. I mean, that's a random environment. Okay. You have to accept that. That's why focusing on risk has more value than anything else. Not big profits like everyone thinks. Stop being Captain Obvious. Okay. So here we go. S&P. This location on the S&P is still a vulnerable location. Yes, it's a breakout. Okay. And yes, the candle closed strong yesterday. That's pretty impressive. But we are still in this location, in this zone, right? This rectangle that I have here. That area is still, I mean, look, we can go back and we can look at some of the price action going all the way back here. Look at that. Okay. So you say, well, what does this mean? I'm not going to go into that now. That's, for my training program. But the point is, it's a location that is not ideal for longs, even though it's a breakout. So what do you do? What do you do if you see the breakout, you're not in it, you're like, oh, I want to buy, the stock market's turning around, I don't want to miss out. Number one, you're not missing out. There is no such thing as missing out. That is just a figment of your imagination and a result of all the nonsense that's put in your face. You're not missing out. If this market's going to break out and the market's going to change its trend, which is possible, this could be the beginning of it, then what it's likely to do is pull back first and then produce a higher low. Okay. So the higher low can develop somewhere in this area over the next few days, possibly next week, right? The higher low can develop here. That is the place to be going long if it confirms, right? If it fails up here and it breaks and keeps going, well, nothing has changed, okay? And that's also a possibility. So how do we know which one the market's going to choose? We don't. We let the market tell us. So the problem with going long here is you are taking all of that risk. You are risking that the market retests the low, and that's still a reasonable possibility. Do you want to take that risk? I mean, you can, but it's not very wise. All right. The more conservative, and I don't like to use the word safer, but the more effective thing to do would be to wait for the pullback. If this market's truly going to be strong, wait for the pullback, look for the confirmation in that area. We have the levels that we can at least anticipate the behavior. Then the market needs to prove itself, okay? Because if it just breaks and keeps going for whatever reason, now you're not caught in it if you had waited for a signal that never came. Does that make sense? So that's the S&P, right? This is going to affect a lot of stocks, all your mainstream stocks, all your Apples, all your Microsofts, all your other nonsense out there that mindless investors just mindlessly invest into, right? That's the way the market works. It's all correlated. This is just a reflection of those stocks. So let's take a look here at the Nasdaq now, NSX. Okay, so it's the same story. I don't have to talk much about this on the bigger picture. Look, double top. Okay, double top in a general bearish trend. Lower high, lower high, lower high. This is a lower high double top. So if this thing takes, and this is a weaker signal than the S&P. If we get this inside bar today and we take out the low, we have a sell signal. Okay, so that's why I say this thing hasn't even broken out like the S&P. These things move together. So if one has broken out and one has not, I mean, this is a red flag. The Nasdaq of all things should be through the roof because this is only 100 stocks, not 500. And these stocks tend to be very aggressive. Okay. So if things were changing, why isn't this thing like, through the roof? It's not. So just keep that in mind. Wait for the pullback here as well. This would be probably more ideal for the short if you're thinking short. Right? Short is still the right side, theoretically, because no major resistances have been compromised. All right. Now, quickly, let's take a look at the Nasdaq on the 30-minute chart. All right. Now, what's going on here? So again, these things are going to be very sensitive to news, but don't worry about the news. Focus on structures. Let's look back here a bit, right, over the previous few days and just make some notes. That's what you should be doing. That's the point of my stream here. So first thing I'm noting are levels. Okay, we know the trend is generally the intraday trend, higher lows and higher highs, right? Except until it gets to this point here, right? So higher high, and then it gave it back for whatever reason. I don't care why it gave it back. We saw the resistance level on the bigger picture, but there may be some news that's coupled with this, okay? I don't care. Point is this, we now have a lower high over here, okay? So that could be the beginning of the change intraday. So as an intraday trader, let's see, what time is it? It's 2 minutes before this candle closes. This is a doji. Look at this wide range doji you have over here, okay? Look at that on the intraday. So if we take out the low of that, right, that would basically establish this basically as the lower high, and you would have the lower low. So you'd be anticipating bearish momentum intraday. If you're looking at tech stocks, you're going to see bearish activity most likely. You know, if your day traders typically look at those pharmaceuticals or things that are not really correlated to this, that's another story. I'm not going to get into those. I'm really covering mainstream stocks here, you know, when we talk about this. But if it breaks that low, then you're looking at the sell signal intraday. Then you want to refine that further if you're looking to short a stock or if you're looking to short this thing outright. If for whatever reason it takes out these highs, then it's the bullish momentum is in continuation, right? So you'd be looking for long signals at that point, continuation patterns. Again, on this time frame, you're not looking for much. You're looking for 20 points, you know, on something like this. Or you're looking for, like, if it's a stock, it could be, depends on the stock. It could be you're only looking for like 50 cents. You're looking for 30 cents, maybe $1, depends on the stock. All right. But if you have unrealistic expectations, you will get caught and that's greed driving you. Okay. Look, so 10 o'clock close. All right. Look, we have something's going on here. Possible some news coming out. Look, what a reversal. Look at that. Nice, right? Intraday. So we have the low in place. Let's see how it goes. If this thing takes out this high right here, basically, then we have a long signal. All right. Even though this candle looks dramatic just opening up here, this thing can close weak. So you have to give it a chance. This is a 30-minute candle. It has 30 minutes before it closes. Don't ever think you're going to miss out on something. If this candle closes strong, if it closes up here, okay, you're still likely to get continuation patterns along the way. Never fear missing out. There's no reason. That's completely irrational. Stop being irrational, right? Be objective. Anyway, so that's the Nasdaq. Let me know if you have any questions about that. All right, let's move along here. I could spend all day on an intraday chart. I just hope that you find it valuable, and I hope that you can use that information. You know, I don't want to waste your time with that, okay? Even if you don't trade the Nasdaq, you can still apply that to many stocks that follow the Nasdaq. Okay, let me move along. So now let's take a look. We're going to take a look at the Forex side, right? We're going to start with the dollar. I'm going to get to that euro question. Look at the dollar. So again, the dollar is going to have a lot of people getting opinionated here. A lot of people are going to say dollar's bearish now. Dollar blah, 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 blah now, right? Well, it could be, but this is still too early to make any judgments. This can turn into a double bottom. This can turn into basically a range, like a consolidation double bottom, which are ideal buying opportunities. Now, we don't have a buy signal here at the moment, but we have a location where one can develop. I'm not being opinionated. I'm looking at factual information. This is a double bottom, okay? And the trend is bullish. Those are facts. Now, does it confirm? That's another story. There's no confirmation. So while this is a double bottom at the moment, this can break and no longer be a double bottom. Now, keep something else in mind. Everyone wants precision. Everyone thinks that this is a precise game. Look, right to the point. Doesn't matter. Markets are messy. This can go here inside of this zone, okay? It can go inside of here, fool everyone into thinking dollar is broken, and then reverse. That's the fake out. Watch out for that, okay? Usually the first sign of something like that is a bullish pin bar or some kind of broad outside bar, green one, okay? We see something like that in this area, then most likely you're going to have a lot of dollar shorts that are caught. That's typically what happens. And if this squeezes, you're going to see the bears come right back into the stock market, right back into Bitcoin, right back into the euro. So please keep that in mind. This right here is a very important chart, and it gives you a lot of perspective. In the bond market has not done anything impressive. So why should the dollar really continue lower, right? If the bond market really hasn't changed, if rates continue to rise, that's going to support this. Keep that in mind, okay? I don't see where the changes are. People can talk about all this nonsense that they want. Whoa, you know, this over here and that over there. It doesn't matter. The chart needs to prove it, Okay, so that's the dollar. Now let's jump over to the euro real quick. How am I doing with time? All right, not too bad. So euro, right? I had a question about the euro. So this euro again, it's a reaction to the dollar. All right, and it's interesting because man, I had a nice short in that euro over here. Good thing I got out here. You guys remember that. Now, since then, I called the pound short basically on this move right here. I called the pound short instead. I got stopped out of the pound. So we're talking about the euro here, right? Look at this structure, higher low, higher high. That's interesting, but it's still at a resistance. The general trend in the euro is bearish. It's trying to change, but it still has some time before it proves anything. This is, again, a fake out zone, just like the dollar we talked about, right? This is the inverse. So as far as euro goes, this is an ideal location for a potential short. Even though we are fighting a higher low, the general structure is bearish, okay? If a sell signal develops, it would be reasonable to look for shorts. Certainly should not be looking for longs, not yet. If this thing pulls back and produces a higher low, that would be the place to look for a long. Kind of like that S&P scenario I pointed out. All these markets are highly correlated. They're pretty much the same story all across the board. So I would be looking for the fake out here. Keep in mind the ECB has their rate announcement tomorrow, I guess early AM. I don't know, 3 a.m., 4 a.m. I'm not Eastern time. I'm not sure exactly what time, but the ECB has their rate announcement that can keep the euro going, or it can turn right around on something like that. Especially if there's a surprise, in the ECB, and they say something inflationary or dovish or whatever. Okay, and we're going to cut rates for whatever. I don't know what they're going. I don't know what's going on over there. Okay, but if they say something like that, you're going to see a bearish pin bar develop. Okay, or you're going to see something bearish develop most likely, and this is the location for such an event. So keep that in mind. Don't step in front of it. It's too early. I will be looking for that short. I'm open to shorting the euro. I like shorting the euro. There's just nothing there at the moment, and I'm not going to be fooled into getting long because it's too early to call this thing bullish. Does that make sense? Intraday is another story, but we're not talking intraday here. We're talking bigger picture. People will say, well, what are you talking about? The euro is rallying. The euro is in a bull market, because they're looking at 5-minute charts or 30-minute charts. Sure, yeah, these candles are all bullish, right? So intraday, this thing's going to look like super, right? It's going to look amazing, but bigger picture tells us another story. The bigger picture carries all the weight, all right? So I don't want to hear those arguments, the euro is bullish. The euro's changed its trend. Look at the RSI. All Captain Obvious stuff. All right, anyway, enough of my rants. Let's now take a look at, quickly, let me see if I have any questions here. I'd like to go over the pound. Hey, Shells, I got a guy here from Kosovo. Hey, good to see you again, Alex. All right, Swahili, wash hands. Okay. Program is great. Can recommend. Oh, appreciate that, Kai. Kai, one of my longtime students. Kai, I hope to see you at the meeting today if you can make it. And by the way, students that can't make the meeting, there will be a record of it, and I will share that link. So you guys can watch it at your own convenience if you can't be present. Okay, I know not everyone, it's not a convenient time for everyone. All right, got Canada. Hey, good to see you, Chris. Okay, cool. All right, Bill. All right, cool. All right, Jeff. Okay, you guys, what's going on here? You guys are clicking on too many of those porn links. I'm sorry, I have to tell you, Jeff. Yeah, lick that button. Okay, so I covered the euro. All right, all right, so cool. I got everyone's questions. So let's go over really quick the pound. All right. I mean, the pound is going to be the same story as the euro, but look at this thing. I mean, it looks very similar, does it not? Right? And it's got a lot of these higher lows. This can get a lot of longs going, thinking, yeah, it's reversed. These are bullish structures, okay? But we still have to recognize the bigger picture. So even this is also in a location that can reverse and fake out in everyone's face, right? Just like the S&P, just like the euro, right? Just like all those markets we just looked at. So it's still it's still a reasonable short. But I'm telling you what, if the short signal shows up, I'm going to go for the euro, okay? I'm not going to go for the pound again. There's just too much risk here. I mean, I just want to review that pound trade that I took. I want to show you, basically, what I saw and what could have been done to mitigate the risk. And there wasn't much you could have done with this one. So the trade was based on this right here, okay, on this candle right here. It was on Thursday, and I think it was Thursday. I can't remember the day exactly. And the same day, yeah, it was because going into Friday, the same day that trade was up 100 pips. Okay. I was like, wow, that was pretty quick. But I was looking for more than that. I was looking for a 400 pip move over a number of days. And then we had this close on Friday. And I said, well, that's a bullish pin bar. Yes. But I mean, I'm going to go into Saturday, Sunday. I'm going to hold the trade because, I mean, how far is this thing going to go? Right. What does it do? It gaps right to my stop. All right, at a 205 pip stop, it just gapped right to it. So I watched the trade go from 100 pips to minus 205. All right, that sucks. Could I have broken even? Sure, after the fact, we could look back. Oh, you could have broken even on it. I could have, but I was trying to give the trade a chance. It's very hard to do when you get the first candle you get just goes against you like that. Now, even if I got out, I waited for the close, okay, and I got out and said, okay, I'm getting out. I still would have lost like 180 pips or something like that. So why not give it an extra couple of 20 pips to see if it turns? Anyway, that stopped out, and look where it is now. So the point of that, one of the major lessons behind that is, you're not always going to get out from the conflicting signal in an ideal way, but at least respect the stop. If I had not respected that stop, or if I got back in because, oh, I know what I'm doing. Yeah. The pound is a short. It's a short. This thing went to 1620. Okay, I mean that's what it went from. I shorted it at 112. That's 400 pips. Okay, I lost half of that. This thing would be 400 pips against me. That's why you don't want to get caught in that. Respect the stops. That is crazy. Okay, that can really hurt your account. All right, so that's it on that one. Let me see. Yeah, so I'm going to leave you with that. I got to wrap this up now before I overdo it, like I always do. All right, so Bitcoin, does this thing stop you out yet, Stian? No, I think it's still good. But like I said, this isn't a location for a short, but the short isn't there yet, okay? Again, when I always talk about ideal or less than ideal locations, understand that that's part of the game. And don't be discouraged, all right? Don't be like, oh, this market sucks, I'm a bad trader. Don't think that, because markets are random, okay? So you can't really apply it like personally. That's it. As long as you're managing your risk. The other mistake not to make here is this. Don't be fooled into thinking that this is like the beginning of a bull market. It could be, that's a possibility, but don't think in absolute terms. Wait for the higher low. If a higher low develops, that would be a much better sign than this. This could just be a bear market squeeze, these are very temporary. As you can see, just look back, right? Look at this, something like this, squeeze, everyone's excited, and then it gives it right back, okay? That's typical. And I don't see any economic changes here. So maybe the market's pricing something into the future. That's possible. But either way, never be afraid of missing out, because there are pullbacks. I don't care if Bitcoin's going to 70K from here. If it is, there will be pullbacks. There will be opportunities. These things don't move in straight lines. Be patient. Okay, wait, because it's about the risk, not about the reward. It's about the risk. People take risks that are too high because it's not apparent. They're not looking at that, right? People are only focused on this. They emphasize that, they focus on that. They don't pay attention to what can be over here. Okay, it's invisible, right? So that's not like a thought. They just, oh, this thing's low, I'm going to miss out. And then they go onto YouTube and they see 10,000 fake gurus telling them to buy this thing. So, strength in numbers, right? Everyone's going to buy it. I need to buy it too. Don't do that. You're part of the herd, okay? Don't do that. Anyway, let me just see what it says here. Okay, can you check Google? Okay, Google. All right, I'll take a quick look, and then I'm going to turn this thing off. Microsoft, and I guess companies have started to have bad numbers because of the environment. Oh, yeah. That's a good point you bring up, Alex. Better buying opportunities ahead. Right. Look, there are always more opportunities. The market does not run out of opportunities. The thing is, opportunities are not frequent. So keep that in mind. Yes, there are always more. Opportunities are infinite, but they're not frequent. A high quality opportunity is going to be rare. So it's normal to wait for one, okay? So you don't want to always jump into everything. Yes, you're going to miss some. That's going to happen. You're going to take some. They're going to get stopped out. That's going to happen. But as long as you're keeping that risk under control, that's what gives you a chance in this game. Okay. Now, you mentioned Google. Google is a problem with Google. Is that right? Google's gapped lower there, right? Google. Let's see here. Man, that's what Google's doing, and the market's happy. The S&P was like, wow, that's not good. Okay, so I guess the earnings are starting to the less than stellar environment is starting to eat into their whatever, right? The bad reports. This is normal. You're right, Alex. Look, Microsoft too. Look at that. That's interesting, right? So wait, is Microsoft minus 18 points? Is that right? Yeah, that's a lot from Microsoft. And the Nasdaq is only minus 25 points. I don't know. There's some false optimism floating around in this market. That's interesting. All right. Anyway, thank you for pointing that out. Yeah, that's certain. Those are certainly red flags. Okay, those are certainly red flags. Now, people may misread those and say, "Oh, the market must be super strong if those companies come out like that and the market's still green." Those are red flags. All right, those companies are leaders. They should not be looking like that. That's very interesting. Also, all right, so I'm going to wrap this up, you guys. Thank you for all your time here and watching me today. Real quick, I have to make an announcement. Tomorrow, I'm not going to have my stream on here. I'm going to put that, YouTube has like a posting thing, like a blog kind of thing. I'm going to put it in there. Again, I'm not going to be streaming tomorrow because I have a webinar that I have to do at 8 a.m. for 8cap, an 8 a.m. webinar. Okay, so I'm not going to be able to do that webinar and then this right after. It's just not going to be realistic. So I'm not going to stream here tomorrow at 9:30. I'm just letting you, I should have said that right in the beginning. I forgot. All right, you guys. So again, so I don't want to hear where is he and all the drama. I have a webinar at 8 o'clock. In fact, I'll try to put that webinar link in the YouTube community posting thing, whatever, so that if you guys want to join it, it's for those of you that have seen my how to swing trade Bitcoin webinar. It's the same webinar. It's the same slides. Okay, so if you guys have seen that, you don't want to see it again, it's okay, no problem. You don't have to come. But 8cap is promoting a webinar for me, and it's at 8 a.m. Eastern time. So I have to be up earlier. I have to be at that webinar, and then that web. You know how I talk for too long, right? So that webinar, I'm probably not going to be able to keep it at an hour. I'm going to try. And even if I do, I'm not going to be able to get this thing on time. All right. So no stream tomorrow. Okay. No stream tomorrow at 9:30. You can join the webinar. I'll put the link in the thing when I can. So just so you guys know, I want to make sure you guys are clear on that. All right. So I have to repeat it 10,000 times. Okay. I'll take the 8cap link. Okay. Yeah, Wedge. I'll have to. I know he'll show up. I'll have to put that link either in here. I'll put it in the Discord as well. I'll put the link in there as well, so you guys can register for that webinar. It's for they want me to do a webinar for them. So anyway, all right, you guys. So I hope you got something out of this. I hope it gives you some realistic footing and some things to expect intraday. All right. Also for the next few days. Either way, I'm hoping to keep your eyes open, so that you're not getting sucked into the nonsense and letting human nature get the best of you. I can't save you from human nature, but I can at least open your eyes to certain things, and then you can at least make decisions based on more objective information. Okay, that's the idea here. Anyway, all right, everyone. So enjoy the rest of your day, the rest of your evening, wherever you are in the world. Thank you very much for watching.